The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Steve Sedgwick and Ben Boulos. These are your headlines. Global equity markets stage a rebound. The KOSPI seeing its best day in almost 6 years, and Japan's Nikkei notching a record close, while precious metals also show some signs of recovery after a two-day sell-off.
The US cuts tariffs on India from 50 to 18%, sending Indian assets higher, with the President, Mr. Trump, saying New Delhi has agreed to stop all Russian oil purchases. Plus, France adopting a budget after months of political turmoil. The Prime Minister Sébastien Lecornu defeating a no-confidence motion after policy concessions secured the backing of the centre-left Socialist Party.
Ladies and gentlemen, it's now time to move on to other things and for France to finally have a budget.
And Elon Musk merges SpaceX with XAI in one of the largest private technology deals ever, consolidating his empire and reportedly valuing the combined company at over $1 trillion.
Well, there's no doubt markets were spooked yesterday morning, but a much calmer pattern emerging by the afternoon. We saw that on Wall Street, here in the European markets, also in the green. And what we've got again on the metals trade today, settling down after a fairly violent sell-off that started late last week and continued into the early part of the session yesterday. So the Dow in the trading window, you can see up more than 1%. Caterpillar, one of the big movers there. Don't forget the market again served up some fresh ammunition in the form of a trade agreement with India, where there'd been some ongoing issues around the importation of Russian oil. So a breakthrough there between the Americans and India, helping out the broader picture. The S&P 500 also firmer, and you can see the NASDAQ parking some of those AI concerns. And don't forget another big week when it comes to the show and tell season on earnings for some of these big technology companies. The rest of the markets, Japanese stocks are seeing a fairly significant bounce in session today. They've been up roughly 4%, near that mark, 3.9% currently. So bouncing strongly across to the Nifty 50, as we mentioned, the trade situation with India now getting 18% tariffs instead of 50% from the Americans, and as a result unlocking gains. Foreign investors have left that market fairly aggressively in recent months, and you can see going back in is what the picture looks like today. The Chinese market more than 1% in the green, and the KOSPI, the market again that was punished yesterday, we saw a 5% plunge in that market, but from a very high perch after solid gains last year. You can see this morning it is recapturing a lot of territory up to the tune of almost 7%. With European futures, I mentioned the stronger picture. Yesterday, we fell out of the gate with some of the market rout that was taking place. But by afternoon, we'd actually recaptured a lot of territory. We're up 1% on the benchmark by the finish this morning. We are also chasing more upside. You're seeing it across the board on the Xetra DAX to the Italian stock market. Let's get to Fahad Kamal, who is the CIO at Coutts. Fahad, thank you so much for joining us. Certainly wild start to February yesterday. The markets looking at the safe haven metals trade that was proving anything but safe and questioning some of the other risk on assets across the market. What did you make of the activity and what did that symbolize to you?
Well, it's a pleasure to be back, as always. Thank you for having me. And I'm much happier that I'm on today as opposed to being on yesterday. But look, obviously, markets are strange. They're humbling beasts, you know. We didn't panic too much on Friday. We recognized that there's probably some technicals at work. Clearly, the CME raising their margin requirements, I think, had a factor to play. Plus, I mean, gold and silver have just been on an epic run. Some profit taking and some, correction was due at some point, and it happened on Thursday and Friday. So the long-term trends, I think, are still intact, and more importantly than that, the risk on trade is supported by very solid fundamentals globally. and we are still long risk.
To the point you just made there, do we just need to get comfortable that there is going to be some sort of shakeout here and there? If you've got asset classes that go up so rapidly, and it wasn't just metals. I mean, the South Korean market up 75% last year. We know some of the AI names up fairly large double digits, in some cases triple digits as well. If you had that sort of ascent in a short period of time, it can take a very subtle move, a very subtle story to spook the market, and suddenly you've got leverage being shaken out of all quarters of the market. Is that just what we saw?
Yeah, I think that's, as far as we can tell in real time, I think so. I think it's just an absolute healthy clear out, which happens from time to time in a market that's trending up, right? And trending up with great velocity in some quarters. That's what I think it was, and ultimately, as I said, things are underpinned by pretty solid fundamentals. Even the South Koreas and the huge surge that you've seen in some sectors, there is an undeniable factual basis for earnings growth in those companies and in those sectors.
Fahad, I want to get your thoughts on the commentary that's doing the rounds about whether silver has now become equivalent to a meme stock, basically, displaying all these traits of heavy participation by retail investors, narratives going viral on social media, liquidity rushing in quickly and exiting just as quickly. Do you think we're now in a stage where the prices are more reflecting that than the fundamentals? Well,
look, I mean, silver, clearly is having an identity crisis, possibly about whether it's a safe haven, whether it's an industrial metal, or whether it is indeed a speculative asset. Probably all three are true to some degree. There's no doubt that there's a liquidity paradigm that's certainly at play here as well, which supports some of the incessant price rises that you've seen. But what is interesting is that what tends to be speculative any one time changes, right? I mean, there was times where things were like Bitcoin were all the rage, and Bitcoin is going nowhere right now. Clearly, a lot of money that used to be entering things like crypto assets seem to be entering areas like silver right now, which clearly has some speculative froth. There's no doubt about it.
And given the sharp moves that we've seen in what would be a traditional safe haven, and most notably gold, where do you think the place to be to look for a safe haven would be now, given the sharp moves we've seen?
Such a great question, honestly, and a question genuinely that at our investment committee we spend hours discussing, right? We realize that, while we are risk on, we want to be very cognizant about the downside. How do you protect the downside? Traditionally bonds, but in a world where economic growth is accelerating, inflation is uncertain, we can't rely on it entirely. We also have added gold to our portfolio specifically because we do believe that it has some safe haven characteristics, particularly in the event that there's a real geopolitical shock or something of that nature. We also hold things like liquid alternatives, which are basically non-correlated strategies to equities and bonds, not traditional long-only stuff, that will also add a hopeful diversification element to our portfolios. Long story short, you've got to diversify your diversifiers in an environment like this.
Did you know that Coutts was founded by a goldsmith? The only reason I say that is because I was just trying to find out when you were founded, and it was 1692. And it's interesting, we're talking about gold and silver, and it was founded by a goldsmith. There you go, John Campbell of Lundy, a Scotsman. Good job I didn't test you on that one. I'm sure it's too weird a conversation. But I think it's very interesting you were talking about you didn't panic, and there's no way a 334-year company would panic on those situations. I understand that. But maybe a lot of traders were a bit panicky because of those margin calls you mentioned, and because a couple of their big memes have just kind of gone a bit X, really, haven't they? They've gone a bit X excitement. You mentioned the cryptos and now silver and gold. Where are those? Do you see where those guys are and what the ramifications, the effects that those traders are having on investors as well? Because they've been quite canny, actually, a lot of those traders, always buying the dip. They did it in April last year as well. I'm just wondering if you see them having an effect on the broader investment flows.
Yeah, look, first of all, you're right. 330-year-old company, it is an absolute honor to represent it, frankly, because of the history. And we've got to make sure that we are around for another 330 years. So we've got to be very conservative and prudent in our decisions. But the other more important factor regarding the flows is that, if you look at over the last year, and take April, for example, Liberation Day, the institutional sold, the retail investor bought the dip, and much of the subsequent rally has been driven by the retail investor. In many ways, the smart money, it almost seems to be different than what it used to be traditionally, right? Where it used to be long-only institutional investors, etc. Today, the retail investor seems much more savvy and hugely driving flows, right? And there is clearly a huge amount of flow coming from non-institutional investors, buying dips and sustaining a rally, which we think is actually super healthy, right? Because it's not just...
I don't know if it's super healthy. I worry whether it's skewing valuation and earnings criteria that you and I and these two have always looked at, and actually making everything a little bit more volatile. And funny enough, I was talking to Jeffrey Yu, who was on the previous show, Europe Edition, and he was talking about the returns might be similar this year, but you're certainly going to have to wear a bit more volatility. And I thought they were very wise words as well. But I have a separate question for you. Kevin Walsh, what does it mean to you? We're all trying to work. I held my hands up yesterday. I didn't know much about where he stood from, to be honest. I assumed he wanted lower interest rates because the president picked him. But I didn't know much, and now I've done a lot of work on him as well. I just wonder what you think about Walsh and what it means.
Well, clearly his Wikipedia page will have suffered a great degree of heat in the immediate aftermath of the announcement. Look, I don't know a huge amount about him either, except that clearly from his CV, he's a deep institutional guy. He's been around the block.
I guess the question I'm asking you is, what does it mean for the long end? And because everyone looks at the long end to see whether there's a tremor there at some stage. I think his stance on QE could be fascinating for the long end.
Well, clearly, look, on the short end, he's very clear that he wants to lower rates, right? And on the long end, he's very clear that he wants to curtail the balance sheet. I think, in a nutshell, he represents stability and old school prudence.
Which is great, isn't it? We didn't expect that from a Trump pick, so that's great.
No, and that's why I think the market has been so appreciative.
Yeah, nice.
Fahad, thank you so much for joining us. Fahad Gamal with us, CEO at Coutts. Let's get you up to speed with some central banking that may have ramifications for the market. Australia's central bank has raised rates by 25 basis points, its first move higher since late 2023. And in line with economists' expectations after inflation, the country hit its highest level in 6 quarters. The central bank raised its inflation and growth outlook for the year ahead, alongside forecasts which implied further rate tightening to come. And the fascinating point was about a year or so ago, we're talking about whether Brazil was the central bank that was leading the charge and signaling to the Reserve Bank, the Federal Reserve in the United States, that it may have to hike at some point. And now we have the RBA changing course and raising for the first time in 2 years. Relevant as we talk about the Federal Reserve, because, hiking can actually be closer than you think. This was a move that the market got up to speed with very quickly because inflation suddenly looking unanchored in the short term. And this is the numbers. Keep in mind, 2 to 3% band on inflation that the RBA typically targets. Now it's talking about the trimmed mean inflation returning to the middle of that 2 to 3% target band by only mid-2028. So it's a full year later than it projected only back in November. So that's a significant change in a short period of time. This outlook also assuming that rates go up to about 4.2% by the end of the year. So not necessarily talking about one and done on the rate hikes here either. Talking about a follow-up maybe in May and June.
Tell you what, let's bring in a guest on this one. Fahad Gamal is the CIO of Coutts.
And he's back.
The director loves it when I do that. I was going to tell him, I thought, no, sorry. What do you think? I think Karen's made a really interesting point. Rate hikes at a major economy?
Yeah.
I just wonder, because obviously everyone's still penciling 1 or 2 declines for the US, more declines in Europe, not so much Europe, but certainly in the UK. Maybe that's upsetting the apple cart.
Well, a cyclical economy. Can I just plug that? A cyclical economy. A lot of resources, for instance, very open trade as we talk about the macro here. If it's hiking, what does it mean? Is the Fed going to be hiking at some point?
Well, look, this is exactly why sort of that point about diversifying your diversifiers is so important, right? The future of monetary policy, we all expect a few rate cuts, but we're not sure, right? And it could well be that we go into reverse and the bond market does have a big tumble, which is absolutely the reason why. And it's not impossible, right? I do think that with the economy accelerating as fast as it is, there's a really non-zero probability that you could see rate hikes. In an economy, and clearly the one that you mentioned is the vanguard, but it could happen in the US, could happen in the UK, could happen anywhere.
Yeah.
All the more reason why you should be very, very wary about your duration position and how you're playing your defense in your portfolios, and being over indexed to the bond market at a time of, I think, where volatility should be, you should be careful about.
Very good.
It's a widespread, isn't it? Because don't forget, we're talking about the Swiss National Bank also contemplating negative. So you've got one bank going higher, you've got another maybe saying, are we going into negative interest rate
real
policy?
Safe haven, aren't they? As we tried to get some comment out of Schlegel, but he's such a great operator, he never says a word. Brilliant. Shall I say goodbye to him? You never know, we might get him back again. Fahad, I will say goodbye. Lovely to see you, my friend. France has adopted a 2026 budget after 2 no-confidence votes in the country's government failed. That means he stayed in, by the way. No confidence means it's a double negative, isn't it, almost? The centre-left Socialist Party chose not to vote against Prime Minister Lecornu after securing policy concessions on tax and spending. The government says the budget plan will reduce its budget deficit to... No, that can't be right, because it says here on my screen, it says, will reduce its budget deficit to 5% of GDP this year. But that can't be right, because the Maastricht requirement on the Growth and Stability Pact is 3%. So France, one of the core members of Europe, it can't be at 5. Oh, maybe it is, anyway. I'm joking. Anyway, it's down from 5.4% recorded in 2025. Oh, here we go. But well above the 3% limit set by the EU. Wow, funny that. Lecornu was initially targeting greater spending restraint, but accepted a suspension to France's pension reform plans, which would have seen the retirement age increase from 62 to 64. The Prime Minister used the parliamentary debate to hit out at critics of his budget plan.
Everybody's rediscovering their electoral slogans because in the end there's a political feel to these debates. They reek of municipal electioneering. They already reek of a presidential election campaign. And at the end of the day, it's all fine to mislead the French people and to once again deprive them of a budget and neglect the greater good of the public. Ladies and gentlemen, it's now time to move on to other things and for France to finally have a budget.
And we'll get into that more in detail a bit later. But also coming up on the show, skyrocketing valuation. SpaceX acquires a fellow Musk-owned company in what is reportedly the largest M&A transaction of all time. Plus, the US strikes another trade deal, saying a partner has agreed to halt Russian crude purchases. And we'll discuss the recent volatility in the crypto market with Deutsche Bank Research's Marion Labour. That conversation coming up at 8:30 London time.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick, and here's the CEO of Siemens Energy, Christian Bruch.
Business leaders should not stay quiet in a world which is super complex. We sit in a privileged position, and we have to use that to ensure that a society remains prosperous, stable, successful.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
Elon Musk's SpaceX has acquired Elon Musk's XAI in a deal that reportedly values the merged company at $1.25 trillion and what is the biggest M&A transaction of all time. The deal comes as SpaceX prepares for an IPO later this year, which would potentially be the biggest listing of all time. In a blog post announcing the deal, Musk said the merger was driven by the need to expand access to the energy required to scale AI, saying the only way to achieve this was to make AI space-based. This is the whole point about putting data centers in space. He thinks it's a better way, a more efficient way to run data centers. But broader picture here, what comes next? Will there be consolidation with Tesla? I think that's the one the market is looking at, whether SpaceX, XAI and Tesla all get bundled up into one offering that could be worth more than $2 trillion. That would, of course, lift the market value and make it massive contender in the tech space. The other point around valuation, don't forget XAI was about $230 billion in the valuation late last year after a $20 billion raising, now about $250 billion on the back of this particular merger.
It's really interesting, the rationale behind the decision to look at the build out in space for these data centers. I've been reading increasingly the pushback from local communities questioning, what is the benefit to local communities? It saps water, you've got the energy issues, energy bills spiking in some localities where these data centers have been built. And so perhaps this is trying to steal a march on the AI competitors by making those data centers easier to get, get permission for. Who do you need to get permission from in space? I mean, that's the question. But it's really interesting, that strategy, again, trying to make that distinction between other AI hyperscalers and steal a march on them.
Yeah, there's a lot going on, and I don't know where to start on this one as well. Profitability? Does anyone care about the profitability of the combined company? They're selling vast amounts of stuff, but I think I would look at that as well, certainly with the XAI part of the equation as well. And as you quite rightly say, what's the point of Tesla as a standalone? The whole rationale, if I remember correctly, for Trump, there's a Freudian slip, for Musk asking for his $1 trillion pay deal was because he said if he doesn't get the money, he's going to take his AI investment in Tesla outside of the company. Well, surely this looks like that's where the bulk of his AI focus is going to be. So there's no reason to have a separate Tesla and a separate SpaceX stroke XAI as well. I think there are enormous questions about the profitability of this and the timeline and the amount of money people are being asked to pay. And also, I think this is a rush to market as well. To get an IPO of this scale, bear in mind it took years to get Aramco to market, which was a $29 billion listing. This one's being talked about as a $50 billion listing. So to get the bankers lined up for June for an IPO when apparently Mercury and a couple of other planets aligned. Jupiter and Venus and Mercury, apparently they're aligned.
Don't get the wrong planets aligned. All sorts could go wrong.
I don't know whether JP Morgan and Goldman can be aligned in that time. That's the question.
The other point is that competition is coming thick and fast at XAI. There's the likes of Anthropic in the space, DeepMind. There is a ton of competition, and whether XAI can stand alone, it has had some help from SpaceX, one of its early customers, to get it going back in 2024. So is it right in terms of just how quickly some of these large language models and companies are developing? I mean, is Grok is going to be as strong as some of the other major players there?
That's an interesting point you made about...
Okay, Arjun has joined us on the set now. We flushed him out from Nintendo coverage.
My big question is whether XAI dilutes SpaceX, because SpaceX, when we talk about moats, this is a company with a moat. There's not a lot of companies out there launching rockets to space, right? And the reusable rocket innovations that SpaceX came up with have been incredible for the private space sector. There's big contracts with the DoD, NASA, etc. This is huge. And satellites have become such a key area when we think about new internet forms, and now when we're talking about data centers in space. But XAI is burning through huge amounts of cash to build infrastructure, buy chips, design their own chips, and train these huge models. And there's a huge question here whether actually this makes much sense in terms of the valuation for SpaceX, and whether XAI actually dilutes that or brings that down in any way. That's my contribution.
Say one more thing from a banker point of view.
Yeah.
I know this is Elon Musk driven, of course. Are you aware of the old poem, The Grand Old Duke of York?
Yes.
Mm-hmm.
Of course, we all are. We all sing it as kids or whatever.
And
it just feels very much to me like you march them up to the top of the hill, building a conglomerate, and you march them down again, and you split the company up into its sum of the parts. We've talked about this a lot, and the cycle of this over the years. And this is just delicious for Wall Street as well. You march them up to the top of the hill, building this great conglomerate, and then you think, well, yeah, maybe I can spin that one off. Now I can spin that one off, and then I can spin that one off. This is a joy, an absolute joy for our dear friends on Wall Street.
Well, you say that, but don't forget there's a few other twists and turns around the direction that they're marching when it comes to Elon Musk companies, about taking companies private, the amount of bonds, the amount of debt that banks have had on balance sheet. You know, the X story was really negative for a lot of the banks, trying to clear all that debt off their balance sheet that they held on to as the market cycle turned. So Elon Musk didn't cover himself in glory with the investment banks.
Well, I think that... Fair enough on the X, but I think that depends whether you're holding inventory after. I'm talking about deal making. And the deal makers over at our dear friends on Wall Street and elsewhere, they will be absolutely salivating at the prospect of all these deals.
Now, we've got to get to Nintendo. Arjun was a good sport they're playing on this story on SpaceX. But you came here to chat to us about Nintendo, and the latest is that sales of Nintendo Switch 2 console reached just over 17 million in the company's first 9 months of fiscal 2026, becoming the fastest selling Nintendo device ever. Arjun's been tracking this a whole way along. What was the wash-up, successful launch, and a great avenue for the company's profits, right?
Yeah, but it was actually really interesting because the success wasn't a given going into the holiday quarter. There were some concerns actually that the Nintendo Switch 2 didn't have enough games out at the moment. There wasn't enough excitement around it around the holiday season. It seems that Nintendo's sort of put those to bed. You mentioned the 17 million total figure. 7 million of that came in the holiday quarter. It was the highest selling quarter so far for the Switch 2 since launch. So that's been pretty good. They maintained their 19 million unit forecast for the fiscal year end in March. So again, Nintendo pretty conservative usually on those forecasts. Likely they'll hit that and potentially exceed that as well. Saying games like Mario Kart World, Donkey Kong Bonanza, these were the big ones for the Switch 2. But I think there is still some concern over two things. One, memory pricing, and whether actually over in the long term, Nintendo's going to have to raise the price of the Switch 2, which is already a pretty hefty priced console. It's not a cheap console. I think it's about $450 in the US, so it's not a cheap console. And then the second one is the pipeline of games. You know, we've got there's a tennis Mario game and this sort of Animal Crossing type Pokemon game coming out, but the big question is, where's the big Zelda games? Where are those marquee games from Nintendo? And I think there's still a little bit concern over the pipeline. I think the share price over the last year has been interesting. That reflects that. There's been a decline, I think, since the summer last year, again, on some of those concerns around game pipeline and around memory pricing. But in terms of sort of that holiday quarter, it seems to have been that momentum is keeping up. And just another tidbit, that the original Switch has now officially become Nintendo's highest selling console of all time, exceeding the DS.
I've got at least 3 of those on the... Yeah. Have you still got in the loft somewhere?
Somewhere,
I've got the one in the middle. Is that a DS on the left?
I've got that one too, my parents' home.
We bought a Switch off someone because they had 2 for Christmas. We never even used it. I mean, no one in my family plays games. The DS I used to love, and the Game Boy I used to love.
Game Boy's iconic.
The Wii,
I get anything for either of those. Are they worth anything?
The Game Boy, I just built one out of Lego.
You're so sad. You're married. You're a young married man. You and your amazing wife Hannah.
The wife encourages it.
Is this what
she encourages it?
Is that so she can watch more wrestling?
Yeah, probably. So I don't honk the TV.
You guys are living the dream. You wait. You wait. You're living the dream at the moment. Enjoy it.
An interesting thing about the strategy with the Nintendo Switch 2, which plays more into kind of Apple's way of developing products rather than its chief rival, which would be Sony in this sphere, which is that the games, as I understand it, are compatible with old games are compatible with the new one rather than forcing people into a whole ecosystem of new games. How much have they said about that, and how much thought has gone into that?
Yeah, that's been incredibly important. It's something Nintendo did mention in their earnings. So Nintendo, you're right, the comparison with Apple's a good one, because you look at other game makers, they release the console and they rely quite heavily on third-party games makers to release games to generate those hits. Sony's sort of changed a bit more for first-party titles, but Nintendo is incredibly focused on designing a lot of its hit games in-house. And it creates this ecosystem around its franchises, characters, and consoles that ultimately helps to drive sales. And what we saw with the last Switch console was that the life cycle was incredibly long, because what it kept doing is leaning on those very popular characters like Mario, like Pokemon, like Zelda, and others to continue to drive sales to the hardware. And then it expanded into movies, which again created buzz around the hardware. And that's a similar strategy they're hoping to employ here with the Switch 2. And a good bridge right now between the Switch and the Switch 2 are the fact that those games are backward compatible, which gives those old players something to play the games on.
1st of April.
1st of April.
Next film.
New film.
Super Mario Kart.
Yeah.
I'm sure I've
won't do them any harm, will it?
First appearance from Yoshi.
Yeah.
All right.
Yeah.
You've hogged enough time. It's my time. No, it's lovely to see you. When are you back?
Later on.
Okay, good. A new season of Executive Decisions begins this week, and the first episode in there, and I spoke to Bill Reddy. He is amazing. He's the CEO of Pinterest. I'll just tell you, he comes from rural Kentucky, and he came from very, very humble backgrounds, and he's working in his dad's auto shop at the age of 13. Extraordinary man. When he took the top job, though, at the social media company 3.5 years ago, it faced significant challenges, and that's when Reddy made his toughest decision. Here's a clip.
When I came in as CEO 3.5 years ago, Pinterest was declining in users. Attrition was way up. Stock price was down 80+%. The narrative on Pinterest was that Pinterest was sort of aging up and aging out and had missed the next generation. And a few months after I came in, we made a decision to do private only for under 16. And people thought it was like, oh, well, you're struggling to get the next generation of users. Now you're definitely not getting the next generation of users. And, I made that decision, through 2 lenses. One, as a dad, I looked at what was happening and just very clearly, I could see that it's not safe for, kids to be contacted by strangers online. By the way, say that out loud and doesn't that just make sense? It's not safe for kids to be contacted by strangers online. Of course it's not safe, but somehow we've all come to accept that. The other lens was taking a bet that there would be real demand for safer spaces, and that maybe that would be a path to win with young users. But it was a huge leap. Hadn't nobody done it before, completely unproven. And so that was a really tough decision. Fast forward, you asked about the best decision. I would say it's been the best decision, both in that, for us as a platform, it's now the case that, we haven't reported this most recent quarter, but as of the last quarter that we reported, 9 straight quarters of record high users. More than half the platform is Gen Z now. And if you ask them, one of the top reasons that they will give is they see Pinterest as a safe space away from the toxicity they experience elsewhere online.
Yeah, they thought he was mad to just drop the Gen Zers social media functions, but it's actually proved fantastic. And as you said there, it's provided a safe space from toxicity. You can listen to the whole episode with Bill Reddy right now in the usual podcast places, and you can watch our YouTube channel on CNBC.com. The episode will also air this weekend right here on CNBC.